It is time for another update on the dollar index and the dollar tug of war. If you have not already seen my video from the first week of January 2020, where I explain my thesis for the dollar tug of war and why I am neutral on the dollar index, neither bullish nor bearish, and expected it to be range bound for a number of different reasons with a lot of volatility, please go back and listen to that. I will put a link to that video at the end of this video. Let's take a look at this dollar index chart. The dollar index now is down to 98.31. However, the last 5 or 6 weeks, it has been a roller coaster. So initially, dollar bulls were celebrating heading into early to mid February until February 20th, when the dollar index, after being above 99, I believe for 12 straight days, when dollar bulls were thinking it was going to go even higher, like Brent Johnson and Raoul Pal, CEO of Real Vision TV, former hedge fund manager, and Tracy Schuchart, who's a professional trader, also known as Shy Girl on Twitter. And then the dollar index then crashed, basically. The dollar bears then celebrated as the dollar index got to below 95 and was falling, as you can see there on your chart. It got down as low as 94.90, and the dollar bears were celebrating. So this is like Luke Roman and Lynn Alden and a lot of people in the gold community. They were touting that this is it with the dollar's breaking, the dollar's collapsing. Finally, gold's going to go a lot higher. But guess what happened not too long after that is we started to get the global margin call on all of this dollar-denominated debt, all of these forward dollar swaps, which are dollar derivatives or dollar liabilities. A lot of professional money managers went to cash after the credit markets and bond markets froze up, and that caused an enormous amount of acute demand for the dollar as dollar funding markets in Asia and in Europe had tremendous problems sourcing dollars. So the Fed then was watching this with this rally with the dollar index and was starting to panic. And that's why the Fed started announcing, besides the credit markets and the bond markets freezing up, the Fed started to announce, first it was trillion per day repo, then it was a certain amount of QE purchases, then it became open-ended QE, then it was 2 currency swap PRs, and all congressional bailouts and all the craziness. And that's why you have this roller coaster in the dollar, because anytime the dollar gets too high, the Fed wants to come in, probably on orders from President Trump, the Trump administration, the U.S. Treasury, and come in and just try to knock it down. And that may include buying up a lot of toxic garbage, toxic sausage that is not good collateral and is not really even assets, and just trying to devalue the dollar that way. So the Fed does not want the dollar too strong. The Fed does not want the dollar too weak. The Fed wants a managed decline of the dollar that hardly any sheeple notice. And financial professionals won't complain about this either. So here we are after all this craziness over the last 5 weeks or so, and the dollar index, despite the roller coaster ride of going up a lot, crashing, going up a lot again, and then starting to come down, the dollar index is about where it was about a month ago. But look at the ride along the way. Wasn't that crazy? It's literally a roller coaster. And you have both camps saying that, they're right, they're going to be proven right. But I'm in neither camp. Again, I am dollar neutral with the dollar index relative to the other fiat currencies, because I understand exactly what's happening, how the Fed, anytime the dollar index gets too strong, as you can see there on your chart, especially on March 20th, the Fed can come in there and just announce new programs to devalue the dollar and get it weaker again. So what do you think about this? I mean, ultimately, the purchasing power of all fiat currencies is going to be going down. Gold is going to go a lot higher in the next few years, but I think is the new normal for the dollar. There's going to be a lot of volatility like this, the roller coaster, and both camps are claiming that they're eventually going to be proven right. Meanwhile, I'm in neither camp, although both camps seem to not like me very much. I think my thesis here of the tug of war of two very powerful forces pulling on the dollar is accurate, and I think I just proved what's happened in the last 5 weeks, give or take, with these charts and the volatility and how the tug of war at different times, one side is winning and then the other side figures out how to come right back.